Okay, everybody, it's nice to see you. Sorry if I was a little bit late. Let's share the screen. Okay, so we are live. You should be able to hear me. Can anybody in the chat verify that you actually can hear me? Tell me hello, whatever. Okay. So let's dive in. These are the different. So these are the different indicators that I'm using. I'm just checking one more thing. Just be patient. Want to make sure that I'm still connected. Okay. So, yeah. All right. Okay, I should be still recording. Okay. Yeah. Okay. So let's dive in. Let's look at these indicators. And we know that the price recently went up. That is great, right? Everybody was concerned about visiting these 55 regions here. So these are the first graph that I'm going to show you, because this is a usual set of indicators that we have developed. It's our power law. It's the power law model. It's the simplest one. Basically, the white line represents the general trend, the general power law. And then we have two bands, right? One is the band that represents the bottom. One is the band that represents very large deviations from the trend. We represent, by the way, there have been some discussion online today. We can spend some time to discuss that. But see, the beauty of a bottom line is that it does really catches the bottoms, right? And it's a parallel line. So it's basically parallel to the trend. And many times we say, we think this is a real power law. And then we talk about the middle line. The middle line, probably it's an artificial line in the sense that if the bottom is the real power law, then this represents some kind of average, right? It's still a power law, but it represents a middle ground between the tops to the bubbles and the bottom. Because basically it's like, there are different interpretations of this, but the general interpretation is that probably there are two signals, or maybe there is a complex signal that becomes like the power law at the bottom, and then perturbations of these power law, deviations from this power law that are very periodic, they are very consistent, and these are what we call the bubbles. Now, why the bubble have certain size, why they happen at certain times, is all open for discussion and exploration. But one of the things that has been observed in the past, that if you connect, if you draw a parallel line that is supposed to catch the tops, it doesn't work, right? Because of the initial bubbles are much higher. So people have done all kinds of silly things, and we can explain why they're silly, like connecting with some kind of straight line the tops. So that is something that I don't like, because it reminds me a lot of TA. It's like you're taking 2 points, then you're assuming that everything in the middle is going to follow this 2-point connection. That is arbitrary. Some people have done it using math, calculating maybe there is some particular trend between these points, to avoid to be completely TA, but it's still a bad idea, because basically you're using only 3 points, and only these 3 points, and assuming, making a claim that there is something happening in between that has to do with this decay of the tops. So it's much better just to realize that the tops don't follow a precise pattern like the bottoms. It's something to notice and understand. But the deviation, like parallel deviations from the trend, are still good because we are still identify regions that are very much overbought, and we do other things to try to come even closer to the top. Like for example, we can almost bookmark, like we can say, we can bookmark using timing where these tops are using these sine waves, right? These sine waves that are periodic. This is much better, for example, when what S2F does, because S2F creates some kind of periodicity by synchronizing with the halving that are happening every 4 years. And then it simply draws a flat line. The flat line is not supposed to be the top, it's supposed to be actually the average, and many people misinterpret. Here we are trying to say there is a very precise place where the tops are happening most of the time. And so we want to pinpoint as much as possible, given the cycle will repeat in time, that is the big if. This we can then predict both in terms of deviations, but also in terms of timing where the tops are. So a lot of the analysis that we do is based on these two things, because there are some people, even among the power law supporters, that are starting to try to get out of this idea that actually the power law also tries to tell us something about the timing. And I think it's the wrong approach, because so far there has not been a violation of this. The timing is very important. It's an important component of understanding Bitcoin. And so all my analysis, even the current analysis of where we are, what is going on with the price, etc., is based on this timing understanding. It's a fundamental part. We don't gain anything by giving up the timing. We lose a lot. Now, if we have evidence in the future that Bitcoin is not as a clock like before, then we will reconsider and we will change this approach. But so far, it's a fundamental component of understanding Bitcoin. So timing, it's not something that we want to get rid of. In fact, it's important to include in the model. Now, this different level, there is it's almost like a modular thing. You start with the overall statement, there is this overall trend, and in a certain sense, the bubbles don't even count in that case, because we know already by the data that we have, they cancel each other. So all these discussion about where we are in the cycle, where are we going, it doesn't really matter. In physics, we call it zero order understanding of something. Even before first order, you go to the bottom line of things. The bottom line is that there is this very general trend. And then you can say, well, do I see other things happening? And the bubbles are so evident, right? So it's actually amazing that we can delete them, because the price seems to leave the bubbles, right? Like here, it reaches a top. This was a fake top, by the way. This is a real top. Then it goes down again, and it's almost like the bubbles didn't happen. But at the same time, they do happen, and you can use them, and they are important. It's not just because it's fun, but the entire philosophy that we have developed is actually that we would like to use this extra energy, in a sense, that we see during the bubbles, because we would like to sell some of our assets at the top and then rebuy at the top, above the bottom. So you don't have to do it, but it's very strong our philosophy of how optimize our understanding of Bitcoin. It's okay to play these little games where you do a little trading. You don't do it on a daily basis, you do it over a cycle basis, and it's okay to do it if you want to take the risk. You have to do it carefully. Okay, so let's focus then, now that we understood all this, let's focus on where we are right now. And it's kind of a confirmation of what I said in previous discussions, weekly reports, that it looks like basically we are following generally, right, within a range, the general power law trend. Because again, if we compare, and in a moment we can switch to a chart where I can show you what happened in the previous cycles. Because again, it's our guidance. We want to compare, given the regularity and consistencies of what we call those cycle over cycle, we also want to compare what happened in the previous cycles. And right now we are slightly above where we were in average in other cycles, but not too far, not in a way that is exaggerated. We were a little bit before, when in the previous months we were actually much higher, and also the timing, right? Because what happens in general is that that is one of the criticisms that people say about the power law. This is why I also don't like this idea of channels and things like that, because when you draw a channel, you're kind of assuming that the price can be anywhere in that range, and it's not like that. One of the claims that we're making that Bitcoin follows very precise patterns, and so usually for about 2 years we are very close to this bottom, and you can see that it was exactly the case. Then what happens during, I think this was around the end of a year, right? So in my chart where we reach the bottom, this was the bottom, then we continue to move along the this blue line that represents where the bottom is, and then at the end of the year, or even a little bit before, around October, this is what the graph shows, we started to hear more and more and more about the ETFs, and the ETFs created FOMO, a lot of FOMO, slowly first, and then a lot of FOMO. But notice what happened. Just a second. For some reason, the power law seemed to be some kind of barrier, right? Some kind of reference that somehow the price didn't want to cross. And today somebody was saying that British Hodl, that is not, it's fun, it's popular, and he doesn't like the power law for whatever reason, because I don't know, he challenges a little bit what he and many other influencers do, because they base their analysis on other things, not real physics and math, and what the chart really tell us. And I don't want to make up stuff, but it's a lot based on feelings. Okay, it seems that this happening, this other happening in the world. So my feeling is that you have to look at the data. This is what we are trying to do here. And so, I heard that he was saying that it's the power law. People are starting to know more about the power law, and it's kind of a psychological barrier. It doesn't work like that. It's the other way around. Like, there is a reason why the power law is there, and it's actually the accumulation and the projection of all the actions, due to the people, but also to the machines, etc. This continuous interaction between these factors that produces the power law. But anyway, so we are still very close. We are kind of moving more or less, oscillating at a given distance from the power law. And in my understanding, and here, yes, I go a little bit towards what many others do, like, kind of opinion, feelings, but it's guided by this understanding and familiarity with the behavior of Bitcoin in the previous cycles and how it relates to the power law. So I have some guidance, right? And this guidance is, we should have been much closer to the bottom. We are not. We left it. And now it's very difficult to go back, because there is already a commitment. There is, some of the ETFs hold Bitcoin, so they can sell a little bit, and they have done it. But the idea was, okay, we finally want to get in. They got in, they could have got in at the bottom. That would have been better. But I don't know how much we know about the power law that I've got here. But it's not too bad. At least it's not the peak, like when sailors got in. And so they don't want, to sell the majority of their holdings. Also, the timing is not correct for people start to be in a bearish kind of mode. We're just a little bit premature. We should have been maybe closer to the bottom. And the idea is that once we are here, probably we are not crashing. We are not going to the bottom. And by the way, the bottom is not 10,000, 5,000, it's 38,000. So it's not even too far. But I don't think we are going there, because in previous cycles, when we were a little bit too bullish and we left the bottom, something bad like COVID needed to happen. Like something similar like this happened in the previous cycle. We left the bottom a little bit early, and then there was a correction, and the major correction was COVID. And then COVID was very particular because there was a lot of liquidity associated with that COVID. And so not much after COVID, the timing was also correct. We started to have a bull run. And so I think that unless there is an event like that, we are not going to crash all the way to the bottom. And even if there was an event like that, we will simply reach the bottom. So my suggestion is that I don't know if this 57, 55, whatever it was when 56, right? Whatever the minimum was during the last few days is the bottom that we are going to see until we reach the peak. But it could be. So it's something to consider. So it will be interesting to mark it, and consider this is kind of the bottom, probably this oscillation range. We're not going much lower than that. And we're going to move along this power law. Now, if we stay in this particular range, we are talking about, and so the critical place to look at that I already pointed out previously, because timing is very important. Timing, this is one of the messages that I'm trying to give all the time. Timing is fundamental for Bitcoin. So if you follow everything else, so this is, of course, under the assumption everything happens like before, right? We don't know until it happens. You don't know. That is the difference between studying the planets, where even there you don't know 100%, but you are a little bit more safe in thinking that it's pretty predictable. With Bitcoin, it's amazing that we can even consider this periodicity, because many other assets do not behave in this way. But because it has done it for 15 years, we can make the assumption and say, if everything repeats like it repeated before, then we can conclude this. Okay, so every time I make these statements, the bull market will start here, this will happen. Remember, it's all based on what we observed previously. If what we observed previously doesn't repeat, then it's not going to happen. But we will also know, because that is the beauty of using this method, that is all based on stats, all based on averages, all based on, not some kind of hand waving imposed pattern that people came up with their own imagination. Because, for example, I was watching a video. I want to actually make a reaction to that video of somebody. I think it's relatively well known, an analyst, and I know people criticize me when I do that, when I discuss other people's model. But the idea is, if we are coming up with a new way of understanding Bitcoin, we also want to compare with what other people do. And there are times when what they do, it's useful, interesting, and maybe can even be integrated with our approach, and other time where it's in contradiction. And so I think it's very important part of being consistent with your approach to also indicate what is not, what is not consistent. Now, am I right? Are they right? We will see, and we can also see the track record in the past of how these methods work. They usually don't. They're always after the fact. But it's not attacking other people. It's saying, you see, you're saying all these things based exactly on what, right? I am very clear on what I'm basing. I'm saying, if you take an average behavior of what happened in the previous cycles, this is what you get. And this is the range of confidence that you can get. It's not perfectly exactly the same, but within these limits, it is. Okay, and certain things are more regular than others. But the other people hand wave and say, well, there is this rule for Elliott waves, and there are 5 components, and it's made up rules. When you actually go and check before the fact, never do it before the fact. They do it always after the fact. They show you, oh, you see, this is the first branch of Elliott wave. This is the second branch. But they never come up with tell you, okay, according to Elliott waves, we should reach this bottom. They never do that. Never. I never see anybody done that. Or if they do it, and you go back to the previous discussions, when they made a prediction, it's always wrong. It's never consistent. But anyway, so whatever I'm saying is based on these stats. Okay, it's not based on some kind of hand waving prediction based on some rules that I made up. And I think it's basically connecting the dot, and humans are very good in doing that. But many times they are mistaken, because we see Jesus in a tortilla, when there is no Jesus there. We are imagining it. Anyway, so if we continue along this path, and then we are using this as a kind of a bottom, and we can extend lines, etc. Let me do that. Okay, because, okay, we are establishing some range of this oscillation. So it's not, I'm not too keen to do this kind of things, but if you take it with a grain of salt, then it gives us a feeling of what is the possible range of values, right? So if we say we continue to oscillate around these 2 straight lines, then we should go, by the time this critical point happens. So what happens here? This is this cusp. So what I'm representing here is my clock. What if you put the power law in a circular pattern, in what is called the polar coordinates, and this idea comes from rational root, that is the person that thought to do this with Bitcoin for the first time. And our addition is that we actually plot also the full model, that is a model with the bubbles. And in this case, this is the orange line. And then we plot the simple power law, that is the straight line. And this is the red line. And so you can see how they interact with each other, or they interact with the price. But basically, when the 2 lines meet, because basically this is like a sine wave, right? And they go across 0, and this is supposed to be a negative component of a sine wave, but we make it positive, so they look like bumps. So these cusps, these are parts where the curve becomes really narrow. It usually is associated with important events, and also the top of these sine waves, top and bottom. So these sine waves are associated with important events. One is the top, the bottom. So we adopted this terminology that is from a clock, right? So we have 12 o'clock, 3, 6, and 9. So if you look at the previous 9, that is the next big event in this cyclic pattern, then it's usually associated when we leave finally, we go above the power law. So we can start to say that the price is actually overvalued. And so basically that is associated with a bull market. So you see here, it happened around this time a little bit, right? So if this was 9, maybe it happened like around 8:40 or something like that, right? 8:50. Um, and so we leave this green area, that it means that we are below the power law. It's a very bullish sign. This is why we call it, it's the full bear market, because there are already signs of leaving the bear market behind when we reach the top here. Many people confuse this top, say, oh, is that the top? No, it's not the top. It's like a critical time in the cycle. That is basically, we are 1 year from the bottom. We are preparing for the halving. There are all these things happening. And so we say we leave a bear market. You can think almost like seasons if you want to, right? So this is if the bottom is winter, this is spring, and then this is summer, right? The full bull market is summer. So we are preparing for this frenzy behavior that we observed in the previous cycles, and it's usually happening at these transitions at 9. We can look at the one in the previous cycles if you want. Like here, you see same thing happen here, where this was almost a textbook example, where we hug the bottom support line for the power law. We stay there. We were very consistently there, and then just a little bit after the transition to full bull market, we started to go up very quickly. Okay, so it's in the previous cycles that point, and again, here is another example. Again, this was actually the first bull that we had, because we usually exclude the first bubble, because in my opinion it's an anomaly. It doesn't belong with the other bubbles. And so usually this transition to full bull market identifies we are very close in going above the power law. The market starts to go much faster. So basically, we go from a power law behavior to an exponential behavior. So we do have exponential behavior when we go up in the bubble, but then they cancel each other in a sense, right? Because when we go down, we also go down exponential. Oh, close to it. It's not perfect. It almost looks like a Gaussian, that is this bell curve. So this is why here its shapes look like almost a bell curve, because also that is Gaussian. The shape is a Gaussian. It goes up and then it goes down, because it's a Gaussian square. I mean, it's an exponential square. Anyway, so you see this transition to full bull has been very consistent, associated with the beginning of a lot of activity in the market. And this is what we are waiting, right? But again, differently from other understanding of the of the cycles, it's super consistent, right? It's okay, Bitcoin has done this all these years. So we are clear on everything we are going to state, where that comes from this periodicity and this consistency that we observe, right? Of course, we are still dealing with an asset, and there is some variability in this consistency that is to be expected. But it's one, I don't know of any asset on earth that is as regular. So it will be stupid not to consider this regularity, right? But at the same time, one has to be careful, because as to understand that everything we say, it's based on things repeating exactly like before, right? Within a limit. So under that condition, then you know why this should be true. So if we follow this range, we should be at this critical point, that is the transition to the full bull market. And when that happens at the end of the year. And we have seen from the previous cycle that the behavior is always associated around this time, but never perfectly, right? Sometimes it happens a little bit before, so it's possible that it happens in November or even October, or sometime later, like maybe a month later, January or February, during that time. So around, kind of gray area around this cusp, things will start to get exciting. Okay, and so the question is, what will be the price when we reach that? So 91 if we stay close to the up top, and 66, so not much different from now, if we move along this line, that is basically the bottom, right? So I took the bottom, I stand it roughly in a parallel fashion, then I say, let's say that we stick to the equivalent of that bottom and we oscillate, right? It could be anything between this range, then we will be around 66. That is more than the bottom that was a 55. We still gain $1,000 in a few months, but it's not the 9,000. To be honest, I almost prefer that we stay close to this green line because, first of all, it's better opportunity to do DCA. So before the bull starts, we want to accumulate as much as possible in terms of Bitcoins. So it will be nice if we can get better prices when we are doing DCA. If you do DCA every month, every week, many people do that. And I think also it will be better because we will have more momentum. Usually, if you start from a lower position and then you have more room to grow and more excitement and people, so I in general, I think it will be better to stay close to this bottom, but it's okay, right? So if we stay there, we are already 90. So let's try to be positive in both cases. There is less of a struggle to actually reach that top, right? And the top again, how do I come up with this top? The top is based on this idea. We see if we take the 3 bubbles, and it doesn't matter, you can include the 4 because it's more or less the same pattern, right? Because once you have 3 data points, you can add another one if it is consistent. Because I was discussing this with somebody else, today he posted something about the decay of the bubbles, and he say includes also the first one. It will not be a regular one in time because the first bubble doesn't have a 4-year periodicity, but he says included it and it gets even a better fit. It doesn't matter. I'm not including it. I look at the 3 bubbles. It looks strange because there is also a nice pattern in terms of decay. And if you take it seriously, that it's kind of a risk because it's only 3 data points, and even 4 will not make a huge difference. So that is a big limitation in making this prediction. But at least again, where it comes from, right? So based on all this idea that if it is meaningful, if this decay is real and it continues to exist, and we don't know yet why it's so consistent, right? We need to explore it. But if it is consistent, then again, see, this is the difference from anything else. It's not me guessing something, using some rule with interpretation. There is no interpretation. You're super consistent. You say, I'm following this method. I see this pattern. If this continues to be, then this should be, right? At least you know what you're dealing with in terms of arriving to certain conclusion. So the conclusion of this 210, it's all based on simple mathematics of how this decay is happening. If the decay continues to be what it is, then basically the idea was early on we had deviations from the trend that were on the order of 10 times, 12 times, then it went to 5, and now because of this decay, we are going to have only 80% more. So if you take what the value of the coin, so to see if I stand this line, so this is how we derive that, right? I stand this line as much as possible. I'm trying to use my line. But this is the power law, right? So if the power law continues all the way here, then it has a certain value. It is about $117,000, right? At the moment of the peak. And again, we are using timing. Timing is very important in Bitcoin. And because all these peaks are happening usually a precise timing. The timing for the peak should be so the cycle really ends at this arbitrary thing that we did. We started in January, and it takes 4 years. So 4 years later, in January, is when the time cycle ends. But the tops are always a little bit before the end of the year. So usually they happen around November, December. And so if you use that, so from a clock point of view, if the entire cycle is 12 hours, it's around 11. This is when the tops are happening. Here I cannot really extend it all the way to the top. We're kind of close, but there is a limitation about 500 data points, 500 days in TradingView. So it's close enough. It's basically we should around November of 2025. This when the top should happen. And the idea is that from the decay we calculated that we're about it should be 80% more. Okay, not exactly a factor of 2. So we are not really doubling these 117,000, because if we doubled, we would be close to 250, something like that. It's 80% more. So this is why we get about 210. So this is where the top is going to be. And then usually it takes 1 year to go down, right? And in this year, we go down, it takes 1 year to go down. Again, timing, everything perfect, all based on what happened in previous cycles. And when we go down after 1 year, we are about 50%, 60%, sorry, from the trend. So we can tell also where it is, because we know where it is, what the value should be. In this case, it will be January of 2027 or December 26 is when the next bottom will happen, and deviation of 60% should give us 70,000. So this is the analysis, not just of this current situation right now, but also of what is going to happen in the next few months. Now, what the other indicators tell us, right? So we have the clock one, that is the color coding has to do with the timing. Usually there is a change in color. We go towards an orange color and then red as we come closer and closer to the top. See here the color is changing because it's becoming more and more orange because we are approaching this cusp. So the color coding here has to do with timing. The color coding here has to do with deviations. And then we have this oscillator that represents how far we are from the trend. And you can see here, basically, we are hovering or oscillating around, right, just below the trend. And in the color coding again is due to the deviation. When we are coming close this top, the color coding should become redder and redder because we are far away from the deviation. And finally, these other indicators telling us the type of regime that we are in. And in this case, the color coding, because these are basically fractal property of Bitcoin. This is called the Hertz coefficient, but is a particular type of Hertz coefficient which was created by these authors that they found in a paper that was called Chaos and Order in Bitcoin's Market. And they found all these power law regularities in the behavior of Bitcoin, even in the fractal nature of Bitcoin. And they developed this indicator. It's a very nice indicator because if you are below 0.5, it means it's mean returning. So basically, the behavior is such that the price wants to go back to the trend. If the value it's above 0.5 and higher value is, better it is, it's going to be trending. So it wants to follow a trend. So here, given that it's a relatively high value, it's a confirmation that basically we are trending right now. So we should continue to follow this trend. We are not expecting to go down. We are not expecting to shoot up. So it should continue to do the trend. And so we can see, we can monitor how this changes. Usually what you see during the bull runs, this indicator becomes even more trend line because basically we are in this very crazy changing trend that is exponential. So it becomes really reddish, indicating that we are basically going very, very fast up, following that particular trend. And so that will be another element to look at. We have many more, and we can look at the other ones. So this one, I think it's interesting because basically what happens is similar. It's basically this one that I just showed you, but now I overlay the different cycles. So you can see the difference between the different cycles. So this was the previous cycles, right? They shifted everything, but now, and the color coding. So here it doesn't have a color coding of the first one where it's deviations, but I wanted to differentiate the three different cycles, right? So one is orange, the previous one in 2000. So this one is 2017 when we had a peak, and this it's the one in 2014. And you can see, first of all, how incredibly regular these peaks are. I had a discussion today with some other power law people. They were kind of doubting my statements that the peaks are very regular. They are. See, in fact, if you do an average of this behavior of the deviations from all the previous cycles, and you calculate the standard deviations of these averages, it's the smallest one. It's at the peak and the bottom. That is really cool because this is where we want to be more certain that we have a precise bottoms and precise peaks. And so it's very consistent. Same thing with the bottoms. They are relatively consistent, right? So they are all aligned around here. They are all happening more or less at the same time. Now, is this the peak with bottom? Is this the bottom? It's similar. But you can distinguish, right, the tops from the bottoms. If you're able, you don't have to be perfect. If you're able to buy in around these regions where peaks, one thing you can do, you can use this blue line, and you can say, okay, if I'm crossing the blue line, then I'm coming back again to the blue line, that is time to for me to sell. And that is relatively consistent rule. But when you use it with all the other indicators together, you can almost pinpoint. And probably you don't want to pinpointing anyway because you want to do DCA. And if you want to, let's say, sell 20% of your Bitcoin with the hope to buy even more at the bottom, right? You're taking a risk. You probably want to start to sell close to that because we are not going to predict it perfectly. It's good enough to be close to the top, right? And you start to sell a little bit, also because if he overshoots, and many times he can overshoot, right? Not much. Again, we never saw anything that goes too crazy. It seems to follow this very precise pattern, even the peaks. You're going to do well if you do it regularly. And if it goes even higher because of some reasons, you can still rebalance the portfolio and sell a little bit more. And then now you have a more USDT that you're not going to spend. You're going to keep. You're going to do more DCA as we go down. And then when we arrive to the top, you buy. So you can see where all the different elements of the cycle are. If you focus on current information, you can see, right, basically all of them. This one was much closer to the bottom at this particular moment. This was more like in the middle, and we are a little bit higher. And you can see the same thing here, but now you see here in this graph, the blue line is the average over all the different cycles, like color coded. Here is basically when we are going down from the peak. This red area is how we climb towards the peak. We are more in this green area where, so this basically this blue area is associated when we are approaching the full bull market. Here we are not there yet, and so we color coded in green this area here, and you can see the white line is us, right? And same thing with the orange, the previous cycles, the yellow, sorry, and the orange, the one even previous. And you can see what is going on, right? The previous one was much closer to the bottom, the other one more in the middle, and we are higher. So even when we went down all the way to 55, we were still higher. There was nothing to worry if you're thinking about cycle repeating, etc. We are basically very consistent with everything else happens in the previous cycles. Here there is some variability, right? But the idea is that we are not too far from the power law. We are ready to cross it maybe very soon, in a few months from now, but it's not time yet. Okay. And another editor that we have developed recently is this one. And what this indicates, so what you're seeing here is the usual power law in red, the two main bands, right? One, now, decently enough far away from the mean to indicate places where if you're above it line, you're probably, the price is overvalued. And so the white line is the price. And what the purple line is? The purple line is global liquidity. So it's very interesting parameter because it connects. So everything we consider so far, it's all based on internal logic, right? The consistency of the cycles, the consistency of the timing, the different deviations we thought that we are following the power law. It's all self-consistent. This connects Bitcoin to the external world because it's the global liquidity. And for global liquidity, I consider so many things, like the different M2 or the major nations like Japan, China, Europe, US. I consider major banks, so where you can find all, if not the totality, the majority of liquidity in the world. And then what I did, I found, and there is I will put it in the comments. There is a paper that I wrote, an article that I wrote, where I analyze the relationship between price and liquidity, this particular measure of liquidity. And it seems they are related. They are now random. If it was random, you will see a scatter of dots, right? It's not. And they are following a precise pattern. Now, I don't know what this pattern is because it's complicated. I of course, checked if it was a power law, if it was an exponential. It's not. It's a complicated function of time. It looks like it's flattening out, so that means big changes in liquidity are not going to produce big changes in Bitcoin anymore. It was more sensitive to liquidity in the beginning. People think that the coupling between these two things is strong. Is not, because, for example, during the bubble, sometime the price, and you can see it here, right? The price does its own thing, and it's not related to the liquidity. And actually, it's almost like an indication that FOMO to cover is driving the price up a lot, and it's not even linked to the liquidity available in the world. So it's again another sign that the price is overvalued, that we are not in balance, right? So it's pretty cool. It's just another way of showing basically the same thing. And so this is now liquidity itself. It's a model of a price, the purple line, based on liquidity. So it's a step further. So basically say, okay, I observe this complicated relationship. Now, if it was a simple relationship, it would be great because here it is. It's an equation like the power law. We can calculate, we can make predictions, etc. It's not too crazily complicated, but it's you will have to use some kind of polynomial to approximate the shape. That means and anything can be approximated by a polynomial because of what is called a Taylor expansion. So basically, you can add more and more terms. You can start with a constant, when you add x, when you add x squared, x cubed, x to a fourth, and more term you add, more similar to what you're observing, you're going to get. But with the price that you pay is that it's too similar. Basically, you're modeling the noise, the exceptions, instead of a general real signal and trend. And you don't know what it is, right? So you have the temptation will be, okay, let me add more terms, and then you start to really follow the shape very correct and very closely, but it has zero predicting power because it's not going to be you're not going to be able to extrapolate into the future. So you're going to find a middle ground. It's a compromise. But it does a good job. You can see it kind of follows the general price. In fact, I don't want it to be too similar to the general price. And the idea behind this modeling is that anytime the price goes above the purple line, we don't have enough liquidity, and so probably there is a correction. Every time we are below, it means that the liquidity is plenty and is there, and the price of Bitcoin is undervalued, and so you will hope that it's catching up, and then we go above it. And it's okay to go above it because this is how you have a bull market. You cannot have a bull market until you have enough liquidity. So the purple line should be above to actually support the bull run. And by the time the price goes above, it's still bull, but probably you're close to the end of the bull. And this is how it happens over and over. You can see that is what happened in previous times when the bull starts always by having enough liquidity. If you don't have enough liquidity, you cannot really start the bull. And this is true over and over, right? You see? In fact, if you go above, it's probably close to the end of the bull. Again, here, you see, we needed to have a right liquidity. But this is kind of a bullish signal, right? To have a purple line above the white line. And let's look at where we are now. We're not. We have actually not enough liquidity, right? So that is consistent with everything else, that it's not ready, there is not the right timing, and it's not just a question of timing, it's also a question of liquidity. So you combine, like always, you make a full picture, it's like a puzzle, you put together all these pieces, and then you have a consistent scientific understanding of the price action that is not based on some kind of TA, it's not based on wishful thinking, it's based on the information that we have available right now. So it's pretty cool. I think this actually adds to the depth of our analysis. I wanted to show you one more thing. Here, okay, here, we can go more in details of the actions and all these. See here is on the 4-hour scale. So it's actually pretty interesting how Bitcoin also follows shorter term power laws, and they became almost like a form of resistance or support. So you can look at Bitcoin also using the power law and these indicators at low time frame. And then if I find it, okay, here, this is our dear clock. So we can see where we are in the clock right now. This is the idea that we can plot the price of Bitcoin in a circular pattern. And again, you can see here all the tops. You see how consistent they are. These are all the tops. Here is where the bottoms are, also be consistent. And then everything in between, right? So this is when we have the transitions from bear to bull, that basically was at the end of the beginning of this year. And then we are moving along. We want to arrive at 9. 9 will be here. When the bull market starts, basically we are in between. And you can see these are the blue and red line are the two power laws. The blue line is what we call the full model. You can see here how the full model tries to grab all the peaks. See, it comes very close to the peaks and comes close to the bottoms, right? Comes close to the bottoms, and we have the bottoms. So that is the full model. It's more like a stretch spiral, like almost like an egg shape spiral. And the other spiral, that is a simple model, that is a red curve. It's more like a round shape spiral. They are both spiral, right? And you will not be able to see this beautiful spiral if the price of Bitcoin was not that regular. It's another indication that we are dealing with a very, very regular phenomena, very precise phenomena. If you average out, I have pictures where, in fact, I should try to do it with these, where I can average more and more and you see what happens. If you average it, it's going to be almost on top. The price is going to be almost on top of a red curve because the top and bottoms are basically almost gone, and you're going to see this beautiful, beautiful spiral that is astounding when you average it out over 4 years. This is where we are. This is works almost like the clock end, and you see we came closer to the red curve because of a recent correction, and now we are getting away. But we should move along here and go over there. Where the top is going to be next cycle. The top is going to be here, where more or less in this region. But this is where it was previously, here, and it's because we are projecting it. See, we are projecting it. This is the full model. We are projecting the full model, and it should be around here. On our 11, it should go there. Okay. So this is the analysis. Hopefully, you found something useful. There are a bunch of questions. I'm going to address the questions, and then maybe we can conclude. All right. So a bunch of questions. Let's see. Why not sell hold? Well, if we knew 100%, right, that Bitcoin does this thing, that will be the logical thing to do, right? 100%. You will want to do that. It will be stupid not to. And people will say, oh, taxes, okay? You make a bunch of money, you pay some taxes on money that you will not have in the first place if you didn't do it. And it can be crazy because imagine, right, even now, of course, it was even crazier before because the bubbles were so extreme. But even now, let's say you bought Bitcoin close to the bottom, like you bought it at 16, you go to 210, or even now, right? You buy it by even now. Let's say imagine that you buy it at 65 or whatever. You go to 210, and you can do this calculation, right? What is the difference between 210? Almost like a factor of 3, right? We still have a factor of 3 from here to the top if we go to 210. Okay, I multiply my Bitcoin by 3, my holding, my money by 3. If you didn't do this thing and you waited all the way to go back, I don't even know why people even care about bubble at that point. I mean, it's fun to see Bitcoin go to that price, but you will be rich for a moment or a fleeting moment, and then you go back to 70. So you are where we are now, in 2 years from now, more, because we're talking about January of 2016. So almost 2 years from now, you will be back where we are right now, maybe a little bit higher. So what is the big deal? Nothing, right? This is why it's important to do this. With people that tell you don't do it, etc. I don't know what we are talking about. I think maybe if you are sitting on 1,000 Bitcoin, sure, why do we do it? Maybe you have some guy, you say, here, play with 10 of my Bitcoin, do it for me because I'm going to the beach, and tell me what did you get from that? Maybe I give you a percentage if you do it correctly. If you are a super rich person, if you are somebody that is holding, and you're hoping to become wealthy with Bitcoin, why not? Why not to try a little bit? Why not everything? because we are not sure 100%, right? We still investment, we still based on this idea that the cycles are going to repeat and they're going to happen in a certain way. It's still risky, So how do you deal with risk? You try to manage it. And to me, risking 10%, 20%, because what is the worst thing that can happen? Okay, worst thing that can happen that once we reach the top, it continues to go up. Well, you're not selling everything. You're still having some of your coins gaining, but it's going to go down. It's not going. If you are tempted and thinking you're under the shower, it happened to me in 2014, and thinking, oh, this looks like the top. This should be the top, because I didn't have all the knowledge together, right? I was putting all the pieces together, and I thought, oh, this is different. This time is different. This time is different. The time is not different. It was the same. At the time, we were thinking there were institution coming. It was a big deal. Everybody was talking about institution coming. They were smaller institutions, so the ETFs, but we were institution even at the time. And then the price started to crash. And so this time we are prepared. We have all this knowledge, we have all this information, so we should act. And that acting, it's up to you, because I cannot tell you, do 10%, do 20%, do 40%, do what you think it's the right thing. Make a plan ahead, see what you feel confident, do DCA, don't do it all at once. But I think you should do it, because you're going to multiply your Bitcoin by a great amount, Over time, you're going to have much more. Okay, maybe we missed our correction. I don't know what you mean. That event could have been Trump, but we Doge. Listen, I think the external events do have an influence, but it's almost like, the other way around, where many times things happening for internal reasons, and different things that are happening to the system, to the network, and then they are loosely correlated with things before. Maybe they are the catalyst, right? The market is already ready for something to happen, and then there is a catalyst, and it's almost like pushing. They have when you go on a place where there is so much snow that an avalanche can happen, you scream, and that little energy of your scream pushes the snow enough where the avalanche is there. But it's not that you created the avalanche, you just trigger it. The conditions were there. So the general thing is that we have these patterns, these overall patterns that Bitcoin follows, and they are so predictable and they are so consistent that the little changes, locally can be interesting, but they are not going to change the overall picture. It's the same metric. Global liquidity went higher. Higher to relatively to what? I saw some of these graphs. They say, oh, it went higher relatively to some previous top, but it's still low because we are coming down from a low place. And again, if you're looking at the relationship with Bitcoin, it's lower than the price. So, and you can show you consistently in the past this metric that is not different from the other metrics because it contains almost all the things that you can imagine. It's always associated with the bull market is associated with us having enough liquidity. And so the liquidity being above the price. It's not. We are not in that situation. Lower scenario of going lower. Isaac, I don't understand what you mean. The scenario of going lower. I don't know if you're still there and you can elaborate. No. I think it's profit or minus and partial trade. We need to keep in mind that this was our build to control or trade it like a normal asset. Or diminish in your opinion? No, the power law is going to be true. It's going to be true for the next 10 years for sure. Nobody can say for sure in trading ever. So when I say for sure, please take it with a grain of salt. But the strongest element that makes these different from everything else, and I know I seem a broken record, it's this idea of scaling variance that I explained many, many times. You can watch our videos, etc. But the simplest explanation that I can give you is that Bitcoin grows like a being, like an organism, and it does it in a proportional fashion. When you look at a child and the child grows, it doesn't have, one limb much bigger than the other. That is a crab. But a child grows in proportional fashion. If it doesn't, then you will be worried, right? If you see an arm that is 2 times bigger than the other. And so this proportionality, it's an analogy, but it's the idea that overall, the entire history of Bitcoin, it grew in this proportional fashion. And the proportion is in the scale. So changes of 10, 100, 1,000 in price demanded a change in time that was equivalent, 10, 100, thousands in days of time. And that behavior is what you see when you look at that straight line, right? The beautiful straight line that we observe. Well, I have it here. See, I don't know. This was created by Luxalgo, this company that is professional. I don't know how they did it because I don't know how you can do a straight line in TradingView. I don't know, because usually you have linear time here, right? You have linear time, and you have, in fact, they created some kind of artificial axis. You see, this is the artificial axis that they created, but you can still understand it using this axis, right? But this is a beautiful straight line. So this straight line that you see here is striking because you can see it is real, right? With your own naked eye. I didn't do any magic, nothing. I just took a log of time and the log of price. And then you see this beautiful, beautiful straight line. And the meaning of it is that it's basically proportional, because straight line, it's all about proportionality, right? Y is proportional to X. Y and X here are the scale. So the changes in 10, 100, 1,000. And you focus on that, you get this regular behavior. It's not going to be broken. What do you think is going to do this? Like going crazy like this? It's not. It's not, because there is something fundamental about the Bitcoin behavior that makes it behave in this way. And you can think about network property. I wrote all these articles where I derived the power law through network properties. I didn't say, hey, it needs to be a power law. It found the power law by itself. Initially, the first time I did it, yes, I draw these. I use mathematics to draw a straight line. I was fitting a line. But we are well beyond fitting lines now. I have models that found the power law by itself by saying, okay, there are these properties, network property, the number of nodes, the number of connection, finding the best solution of all possible solutions includes exponential, S-curve, find what explains the data. And it tells you, here it is, and it's a power law. In fact, if you allow for the connections to be a function of time, like the strength of the connection, like sometimes the connection are stronger, sometimes are weaker, and you say, I don't think it's a constant. Make it something that changes in time. You know what it does? It produces a yellow curve. It produces exactly these bubbles. It says, okay, yeah, I see behaves like a network where the connections are becoming stronger and weaker every 4 years. It's so cool. It's so cool. So I think we really are into something. It's not a fantasy. It's not an imagination. There is some real physics behind this, and it's different from everything else. Because it's the only model, it's the only theory that is backed by a bunch of other things that are self-sustaining each other. So I don't think it's going to break now, at least for the next 10 years. Now, what is going to happen in 10 years? 10 years, Bitcoin will be $1 million. We will have like the market cap of gold. It will be a milestone. When we arrive there, we will have several videos from here to then, and we can discuss it, and then we can celebrate. Maybe we can all meet somewhere and have a party or something. 1 million Bitcoin party. The Bitcoin power law was right. Told us, and that is going to happen. And then we look at the next 10 years and see what happened. I think at a certain point we are getting hyper Bitcoinization. It's possible that it happens before this thing tapers off, because at a certain point it's possible that it's going to taper off. That is actually part of a network model that I produce that tells you what are possible value for tapering off. But right now we don't know, because basically there are almost like an infinite number of values. Right now the solution tells you we are very far away from that tapering off. We are not in this regime. So it looks like a perfect power law. Probably it's not perfect because it's going to taper, but it's possible that the tapering doesn't ever happen. It's possible that we get hyper Bitcoinization before that. And then, this, remember, and something that I'm going to write an entire article about this, but I don't know if it is clear that this is the story of Bitcoin and how it went there, how it became hyper Bitcoinization event, and when we are going to have this hyper Bitcoinization event, because why this is the story of it? Because many times I hear, why we do it with dollars, why we do with euros, why? Because this is exactly what we are trying to do. We are trying to explain how Bitcoin overcame the dollar, how it grew relatively to the dollar. What else would you want to do it? We can do it. We can do it with gold. We can do it. I did the other day. I did it with houses. How many houses you can buy. You can do it with that, right? I can buy 0.3 houses, 0.1 house, or whatever. You can do it in that way. But it's going to be always the story of how Bitcoin gained value until then, we have like a stable standard. And once we have a stable standard, it's going to be stable. It's not going to grow. Now, some goods can lose value or gain value, but that will not be consistent, pattern, because it will be more of a story of gold. If we discover an asteroid full of gold, the gold price will crash. But it's about the gold. It's not about the relationship between gold and Bitcoin. We will not have a dollar anymore. Maybe the dollar is simply pegged to Bitcoin. So that story will end. So this story is not going to happen forever. This power law thing. It's how Bitcoin went from being a little cell all the way to this big, huge monster that is right now and is going to be in the future. That is the story. Can we use Kelly criterion? A lot of wonderful questions. You're so good in asking all these questions. Kelly criterion. It's a good idea, and so I'm going to try. In theory, Kelly criterion can even be used to actually establish leverage, right? So if you will be interested in small little leverage, I will never say, hey, let's like in a bull market, is it a good idea to maybe take a little portion of your assets and buy some futures, maybe at 1.3, 1.4. Technically, you could do Kelly also for that. You could calculate and say, what is safe? Is it 3 times, 4 times, 5 times? And you can do a plot of leverage, but you can also do portion of your portfolio. So yeah, it's something that when I have time, I will do for sure. It's a very good question. If we drop, have you seen a relation with the website? I wonder if there's a significant correlation to the global liquidity. Yeah, that is, I think, another idea to use the XY. It will be probably, basically, I did another graph where I took all the different currencies and I gave a weight to the different currencies. In fact, I have a graph somewhere here. Maybe I'll show you next time. I made a trading view indicator of it. I took all the different currencies. I gave it a weight according to their GDP. and then I look at gain, right? Because it's the only way that you can compare different currencies if you look at the change from the beginning. So how much all these currencies have gained relatively to Bitcoin, or actually the other way around, right? How much Bitcoin gain relatively to this coin, and then you can average that. And it's really cool because actually it becomes even a stronger power law, and then it's based on gains instead of a particular currency. Now, if you are trading, you do want to know what is the value relative to that currency. But it's still a good measure. It's an interesting, and I think doing it with DXY should give a very similar result because this is what DXY is, right? It's some kind of average of the strength of the dollar relative to all the other currencies around the world, or gold or whatever. But so yeah, it's something that we could do. It should be relatively easy because with TradingView, probably DXY even comes up, or maybe it should be easy to make a power law like that. Yeah, let's do a 1 million party. If we drop to 40K, this is Shafi is asking. Sorry, I'm not reading all your names. Will 200K be still expected, or will this adjust? I think actually if we go closer to the bottom, and again, when I am more sure about something, I will tell you. When I am not, I'm kind of bullshitting. I'm also telling you that this is a little bit in the area of bullshitting. Like if we go low, we go even higher, right? It makes a little bit of sense, right? Because sometimes, first of all, there are a lot of liquidations that are happening when we go down, a lot of liquidity that is created by these liquidations that are happening. So it often happens like that, right? We have a strong correction and then there is a reaction. So it's not complete bullshit. So it's, in a sense, it's almost better. Like people celebrate when we go to 60, right? But it's the wrong time. It's the wrong time. I want to see that 60 and 70 and 80 when the right time comes. Then I celebrate because we mean that we are going towards 200,000. But right now, I'm always a little bit on worried that we are saturating things. That maybe we need another correction. Maybe we need a correction to 55, 45. And then maybe it's going to be even stronger when things come. Plus, it gives us another opportunity to get a better price for Bitcoin. So I don't think that peak of 210 it's unreasonable. One thing I can show you that I think you will find interesting. Let's go back to the chart. Is how this looks like when you do it linearly, because I think many people haven't seen that, or maybe they don't remember. Let me show you that. Okay, you see how things look linearly like this. So if I don't do the log of a y-axis, it looks like this. It looks much more intimidating going there, right? Look where the peak from the previous cycles were, like here, over there, they look how small it is, right? Because they look tiny, they look like big and huge. Now you can even not see them, right? I'm allowed to magnify things. That is a little one in 17 that it looked so enormous when we do the log, because log that is one of the reasons why we do a log, right? It gives relative value to changes in time, right? So it's all proportional. It's more proportional to the scale. This might look so much bigger than this one, right? Because now it's linear, and so now we are here. This is where we are, right? And it looks intimidating, right? To go all the way there. It doesn't look like as a matter of course. So when people say it's not bullish, okay, you want S to F 500,000, it's over there. Okay, do you think that we go from here to there? I don't think so. I think it seems crazy. But these, yes, it's going to be challenging, but I don't think it's impossible, right? It's reasonable. So yeah, to answer your question, I don't think it's a problem if you go to 40. Now 40, remember, as we start to come closer and closer here, it's going to be, yeah, it will be really like very close, but it will be actually below the blue curve. So I will say that maybe 45, right? So it's possible that we have a crash all the way to there, 40, 45, and then I think it will spring stronger. I want to be positive and think positive about this. I feel confident. I feel confident that all these things will play out exactly like we are supposed to play. That we're going to see this 210, and we're going to do it together. By the way, we do have a Discord channel. If you want to join us, you should go here. I can put it in the chat. It's called Poseidon.com. That is our main website. Yeah, where we have everything. There are free charts. There is um, the newsletter. So if you sign up for the newsletter, you will get all the articles that I wrote and I'm going to write. Make sure if you go to the newsletter, you will get an email and verify your address, because I know some people told me, "Oh, I didn't get anything I sent up," but it's because they didn't verify the email. So make sure to verify the email. And there will be soon like a link to school where it's going to be a free sequence of classes that you can follow, where you can learn all the basics about the power law. But there is also a page about the indicators, all these indicators that you see here. And the way to get the indicators, if you like them and if you want to use them, is to join our Discord. And here, I'm going to pitch a little bit myself, but basically, we try to make it very, very affordable. So if you are interested in just one of these indicators, like the main one is only $5 a month. It's basically symbolic, it's nothing. And you even have a 7-day trial. So it's mostly to keep out the trolls and people that are not serious, because otherwise we just give it away. And so it's really low entry, because I know there are people all around the world, and some people $5 is a big deal for them. So we are trying to keep it symbolic. And then if you want all of them, I'll include the liquidity, included the one that compares the different cycles. Right now, I think we have like 8 indicators, something like that. It's $20 a month. It is, again, super, super reasonable. And we made a pledge that unless there is inflation in several years from now, we adjust it for inflation. But beside that, we want to keep it at $20. And every month we are coming up with a new indicator, basically something different, some other angles. I want to do something soon about MicroStrategy, maybe the mining company. I already found like there is a power law between MicroStrategy and Bitcoin. So we could do a model out of it, like we did it with liquidity, where we plot what we expect the price is going to be for MicroStrategy, because of course, it's MicroStrategy that follows Bitcoin. Even if sometimes MicroStrategy can influence a little bit Bitcoin, but it's usually the other way around. And so we can say, given the price of Bitcoin, what do we expect for MicroStrategy? Or we can see if there is like a deviation, and then you can act on that deviation, because generally they follow each other, but there is some, like here, right? Sometimes we are above the power law, sometimes we are below, and we can decide, okay, should we keep our strategy stock, or we should sell it, or whatever, And so there are some people that are interested in that. So the idea is, the deal that we made with the people in the Discord channel is, no matter how many indicators we are going to create, are going to be always, everything is going to be $20. even if we make like 30 indicators. But I don't know how more fair and balanced I can make it, because right now, we appreciate your support because it's basically both my son and my job right now. We do this full time. So we are trying to survive out of this, because I don't want to touch my Bitcoin, etc. But I enjoy it. I like the interaction with people that are supporting. Hopefully, we're offering a service. So please explore it. Try maybe with 7-day trial. See if you like. And when you join the Discord, then we have many channels. There is a ton of people that are really helpful because we are basically doing it as a group, and we help each other. We have nice discussions um, where you don't have to perfectly agree on everything. You can have your own opinion, but be respectful. But people offer different modifications of the indicators. Everything for free. Once you come to the Discord, there is no difference between $5 and $20 supporter. We don't make discriminations like, oh yeah, you don't pay $20, so you cannot access this. Everything is accessible. We meet 4 times a week. We go through different topics that people want to discuss, and we read this book called Scale. That is all about power laws. We read it together. We discuss it together. On Fridays, I teach people how to code, and there are already people that are making their own indicators. Like sometimes so good that they're almost like competition. But we don't do competition with each other. We help each other. But I'm proud to see some people that came, like even blue collar people that never traded before, and they like trading. So sorry, they didn't ever do coding, and they learn how to code, and they start to use all these indicators. It's really cool because it's nice that you can see how to do these things yourself, right? If you can see, oh, look at those, look like a power law, and you prove it to yourself instead of trusting me, it's amazing. So this is one of the things that we want to do. So join us if you feel there is some value to that. Come to visit us. But yeah, Hassan, thank you so much for you guys being here because you also give me a lot with your questions and your and following us and giving us feedback. So it goes both ways. So thank you too. Okay, so guys, unless I didn't answer, have you looked at using Elliott waves? Yeah, I'm going to make a video about Elliott waves. There are some, and this is the last question I answer. Okay, so I was talking about actually a guy. I don't know his name. I don't remember his name, but he's quite known for using Elliott waves. And what I noticed that there are some people that have very good intuition. I met, like, for example, a guy one time in one of these trading group, etc. He had, I don't know how he did it, but he will look at the chart and say, yeah, of course it's going up. Oh yeah, of course it's going down. And I thought in the beginning he was bullshitting and he was just showing real results. I mean, sorry, past results, and he was selecting which one to show. But then I saw him do it in real time, like he will, like in intraday trading. That is the most difficult thing. There are some people that have this kind of intuition. Maybe they are very good pattern recognizers, but when they have to explain it to you, okay, what did you exactly do? How did you put it together? You listen to their explanation, it makes no sense because they almost justify to themselves, oh, I use this and this other, and this how it happened. But it's so silly, and it's made mostly based on these things that are more like visual aids, the real patterns, but their brain works in such a way that they do something, I don't know what it is, where they found some real pattern, some predictability. But it's a skill. It's something that you develop over time. It's not something that is easy to transfer from person to person. It's almost like playing basketball. Like a player can tell you, oh, maybe I did this and did this other, but a lot of things that they do, it's second nature. It's some kind of almost like a motor memory. And so, yeah, there are some people that are amazing traders, and then they try to teach to other people. I follow this other. And if you try, because I try to code what they do. Like if you have a method, it should be codable, right? Do you agree? I should be able to come up with some rules and say, okay, when this happens and these other things happens, like I do here, it's all coded, it's all equations. I should be able to reproduce what they do. But when I tried almost every single TA, including Elliott waves, it doesn't work because it's somebody making up stuff. And sometimes it works because we have these skills, but it's not because of the Elliott waves. They justify. You understand what I'm trying to say? You get it? That is my experience. And I have done this years and years and years. I never found a single TA measure that is reliable and works all the time. This is why we do these things. We are trying to get away from TA, and it works with Bitcoin because you go and do this stuff with Nasdaq, it doesn't work. I don't know why it works with Bitcoin. I don't know why Bitcoin is so regular, but it does. And so Elliott waves, I'm going to make a videos on them and explain what they are, because I saw this guy and many people were following him, and it's not about putting down the guy. Maybe I don't even mention his name or whatever. I'm just talking about Elliott waves in general. But it seemed like he didn't have a clue. He didn't have a clue about these things that we're talking about. He was saying things about the future of Bitcoin that seem to contradict all the things we say about the power law. And it's not about contradicting the power law. It's almost like I felt bad for him, say, don't you know the power law? Because actually he had he was also showing some of the stuff that was predicting previously. And we were like, if he was following the power law, he will not have say these wrong things. And so it feels almost like, to me, people are blind. Without knowing the power law, you are blind, and you don't know what you're doing. You're in this forest and you're getting lost. And so I'm going to take a look. I want to know a little bit better before I say even more about these Elliott waves. There is one little component of the Elliott wave that there is some validity that, yeah, things are wavy in data, and sometimes the oscillations, when the oscillation became faster and faster, that is associated with a crash. And there is a physicist actually that did some work on that, but we should actually revisit this work of this physicist where he has this model where you see that there are oscillations in the data, they became faster and faster. It's almost like herding behavior, and they're usually associated with crashes. So maybe it's another way for us to identify the bubbles, or maybe other crashes, like mini crashes that are happening when we don't have the bubbles. But right now, I don't trust any of these TA approaches, like not even one of them. Some of them are better, some of them are worse, but including Elliott waves. Okay, let's do this. Let's stop here because I think we got enough content today. So thank you to be patient and follow this long session. Always start thinking, I'm going to make it half an hour, and then it never ends. Okay, it's a different one, right? We have different style from other people. Okay, thank you so much to be patient, and see you soon. Bye, guys.